Okay, quick look through Wednesday's end of day closing screens. The phone literally went just 2 minutes before the 1 second, 2 minutes before the radar. So let's jump through these screens. Pretty sideways, boring day in the US, but that kind of boring upmarket sort of behavior is there, isn't it? If we go to gold, punching back higher, we're up near highs again, not far off anyway, but really obvious place for it to test. Yes, you know, it might not get there, no prediction here. You know, gold could go into a big channel for all we know, but try not to predict, just follow along. Gold miners GDX is up plus 4%. So hopefully we get some, well, they've been doing okay, haven't they, the gold miners this week. I'll jump straight into pro gaps, see what's in there. Cheers, James. Sound of Vision. I was on the wrong page. Let's see what gapped up this morning. And into the 6-month closing highs. I've got 72 today. Financials again. And a few others. So I'll just jump straight down. Well, I can fly through them fast for anyone who's interested in the banks or the investment trusts. Get through the first 31. This is a lose less scenario. Turnover flat. Dialight is turnover is actually down, but this one's expected post profit before tax. Horrible action, horrible trading stock. Always has been, probably always will be. Tick back up on the numbers, but turnover, forward turnover's down on this one as well. Choppy trading stock as well, you know. VLX punched out that base today, didn't it? So, you know, we had first pullback to mean trend here. Now, that's the interim. I'll just bring this one on. Obviously, this, you know, these are the numbers we already had. Whatever's going to come into the forward numbers following what we saw here, revenue 13%. That's in line. Anyway, fill your boots with that stuff. Higher price, not exactly a stock what has much beta, but it has been okay in the past. Stumbling sort of trend action. It's done a lot of nothing, this stock has, for a long time, hasn't it? We had a base on it here and it didn't really pass the GTRS. We've got another one here. It's not bad action, is it? I'm just trying to do the old 5%, put a little line in the sand, and so, you know, this thing's probably going to back and fill at least half of that stick tomorrow. And, you know, no predictions there. Just try not to be the person who's chasing these things. If you're interested in that one, it's a little bit of a sloth. A lot of a sloth, I would say, actually. Moving on. I mean, it's, you'd have to dig into those numbers on it to find much, you know. It is a stock what's like, though, but has a bit of a following, doesn't it? But they're not exactly exciting numbers we were looking at. So whether the update changes that, I don't know, because I haven't read it. Gear for music. So obviously we've seen this one basing out as well. This one's got some solid forward numbers on it. G4. Let's just have a quick look at the interim's right in front of it as well. I'll just double check, because we don't seem to be getting all the news reports up on the chart, do we, at the moment, for some of these. Does it highlight it? Gear for music? No, but 18th of November. That's what it's saying. Don't know if that's confirmed or not. So yeah, I see the little base. You're stepping right into earnings on that one. Here's another one, Aviva, large cap stock. Go on, I'll punch it in for you. I breeze straight past the large caps. We punch tops tiles in. TPT. New closing highs on CNC. Still helping the portfolio, that one. So that's what we see in there, and then into swing points. In order of sector. Avon. Let's just check. That was the prelims, so we. Now I don't know if this has jumped forward or not, because it's got some pretty good forward numbers on it at the moment. I mean, no, it's just a big tick up after that. Pretty small print from last year's pre-tax. Turnover's not exactly knocking it out of the park. I think I can move on from that one myself. Got here expected post payments, that expected to post turnover. Moving on through the investment trusts, Halma. Obviously, Games Workshop's recovered a bit more. I drew a pullback in on this because of this, all this supply. It's working on it, isn't it? It's slowly getting there. I'll just punch it in as well. And quick look at the end of day screens. It's a few minutes today. So, end of day. I've been chance just a higher high. Aviva breaking out of a base there. What's he 100? TBR. Northern Bear moving on. Halma. LMA. Swing point from pretty normalish area. Not exactly the cleanest trading, but I kind of see it. But it's into results again. So for the swingers out there, that's a little bit risky. Next up, well, a lot risky. IHE. Just stepping in front of that. The better scenario is that you get the earnings report. It punches higher because of the earnings report, and then you get the normal back and fill and trade the pro move. You know, that is more of a sweet spot. You'll find a lot of momentum traders will focus on that as well. In the US, your Dan Zangers and stuff like that, they'll trade the second setup after the initial. There's the reaction, and then there's the setup, the pro move. VLX. So yeah, I mean, obviously that one's the best one today, isn't it? But whether it's one what can trend off into the distance with beta, it's probably going to be a bit more of a sloth move, isn't it? But you know, never say never. I do see it totally. Lower beta, obviously, it's you know, you can tell by the base is probably 15% or something. So that is what I see. Should we draw a clean line in the sand on it? Three, 3. Anybody? Oh yeah, just quick catching up with Malcolm. Just dropped a little thread in the chat. Have a read of that. We all go through that. Very common. It's always the case. It's always the fight between trading your unrealized P&L, isn't it, and trading what your back test says. some people think, you know, trading the unreal. Well, you know, if you're a momentum trader, you are trading the unrealized. You're basically selling into strength and doing things like that. Um, so for that style, it's draw. You don't soak up the drawdowns, but you do get left behind. For someone who's riding more of a primary trend, you it's tough, isn't it? You know, you've got you've just got it on a different time frame, basically. But it is the constant battle. One thing I always say is, if you find yourself signing into your account for any other reason than adjusting, you know, taking planned trades, adjusting planned trailing stops and things like that, you know, if you find yourself signing in and pushing orders around unplanned, you know, you have to go find the root of that problem, you know. The way you sort of get on top of all these things, consistency is by adding, you know, being rules based, isn't it? It's hard to just wing it. You see people out there all the time, you know, saying, you know, you can't trade using a spreadsheet. Well, no, but you know, having a spreadsheet can basically tell you all the things you need to know, so you head straight. You know, you know your risk to stop. You know all these important metrics, and you know if you run, you know if you're trading a bit aggressive or not, because you know the numbers, and so you know just having all that methodology and that in a spreadsheet, it it you know it takes time, but it sorts the psychology out. That's basically how I see it. Without it, you're gonna be flying by the seat of your pants a little bit, I think. But yeah, I will leave it there. Have a fantastic evening. We'll see what tomorrow brings. A couple of ideas in there. It wasn't there tonight. It's been a bit boring, but it seems like a few stocks are perking up a bit. Cheers all.